Hey everyone, and welcome back to the Crypto Analyst channel. My name is Brendan, and I hope all of you guys are having a great day no matter where you are from. Today we need to talk about this large consolidation zone that is forming on Bitcoin and the potential of an even larger squeeze than we just saw. Now, if you don't remember, Bitcoin had a pretty nice pennant that was forming. It eventually led to a breakout, which was very short-lived. And now that we see this new consolidation zone on Bitcoin, I want to talk about what this could do to not only Bitcoin's price, but a lot of the altcoins as well. But in additional breaking news, we have a $100 million funding round coming in for sustainable blockchain, as well as GameStop's Ethereum-based NFT marketplace blowing Coinbase's out of the water. This could be the revival of NFTs and essentially bringing back some much needed volume to the NFT market. Again, the numbers here are quite crazy. They are doing multiple times over what Coinbase has already done since their initial release and launch. But again, we'll dive into that in just a moment. Now, in some not so good news, OpenSea has unfortunately announced that they are laying off 20% of its staff due to the crypto winter, and Celsius is also acknowledging a $1.2 billion hole in their balance sheet. So as per usual, there's a lot happening in the world of blockchain and cryptocurrencies. This is your place to stay tuned and stay in touch with everything that is happening, from the technicals on the chart to the fundamentals in the news. So let's begin by diving into what exactly is happening on this chart before we get into some of this big news, because again, I think these two positive ones are going to definitely outshadow these two negative ones. But Bitcoin is still very much in a consolidation zone. It's not forming higher macro swing highs, and it's not forming higher or lower macro swing lows. It's really in this zone like we saw it just a couple of months ago, where Bitcoin was very much in this sideways consolidation zone. We saw some smaller squeezes happening in here, but for the most part, Bitcoin was just chopping in between this zone, just back and forth until one of the macro zones actually ended up giving out, which led to another breakdown of Bitcoin. In fact, it looks like we're actually seeing a very, very similar pattern over here, where we have the initial break downwards, just like we did here with a pretty nice wick. And then ever since then, we have just above that, around the candle close area of this wick, a consolidation zone. In fact, that's exactly what we're seeing right in here as well, where we are seeing no macro lower swing lows or no macro higher swing highs. And essentially what this does is just create this very choppy zone for Bitcoin, where its price is most likely just going to continue to bounce around and potentially even squeeze in until one of these zones are broken, in which case Bitcoin can then break out to the upside or break down further to the downside. So the big takeaway here is be on the watch for this. This is definitely this is a no trade zone until we see some sort of nice divergence or some sort of nice squeeze happening. But right now, it's very clear that Bitcoin is just chopping in here. Now, one could say that we are still seeing, again, lower swing highs and higher swing lows. So if you want to kind of label this as another form of a squeeze or another form of a pennant, it might be a little bit too early to confirm this, but I think the idea is there and overall correct. And so when we're looking at this from a very general standpoint, we can see that there is the idea of maybe another squeeze or pennant coming its way, which could lead to another breakout or breakdown, depending on if resistance or support breaks first. Again, a pennant is a very neutral formation and continuation pattern. And so when we're seeing this, this could be one of those areas where, yeah, we lean one way 60-40, but for the most part, we want to either be buying support or shorting resistance and then playing the breakout or the breakdown here. So lots of ways that we can be playing this area, and clearly a lot of volatility and potential. Volume looks like it is falling off as well, as we can see over here, especially as we are heading into the weekend. I don't think that's anything too shocking. We have seen it been in lower zones in the previous consolidation, so maybe we get back down into that low volume area before we see any kind of a breakout or breakdown, because that is typically what we see with volume falling off and then the squeeze happening, and then an inburst of volume comes flooding back into the market. Now let's talk about what's happening in the news. And before we get into that, let me mention one more thing. If you guys want to get access to my technical analysis early, make sure you head down to the link in the description down below and check out Crypt Nation, because that is exactly what I do there. as one of their analysts. But what's happening in the news right here is Five Ire, maybe I'm pronouncing this wrong, has raised $100 million to fund the expansion of sustainable blockchains. The company will use what it calls proof of benefit mechanisms, saying that they are the only sustainability-focused blockchain unicorn in the world. So they're making some major strides here, and the big takeaway is that there is still, despite being in this very bearish bear market that we're in right now, there's still a lot of money. Instead of really $100 million is no shy amount. So people are still very comfortable investing into crypto and Bitcoin and other blockchain-based assets right now in a time where a lot of people are running away from the tech industry. And that's because scared money doesn't make money. And if you are one of the people who bought the dip in 2000 or in 2008, you're probably sitting a whole lot better off now than even after all of the crash that we've seen. You're still probably sitting off a lot better now than you were in 2008. Again, a lot of the people that did the hiding and got out of all of their investments. Again, there's some investments that were probably smart to get out of. But the people that did the overall investing during those times were the ones who sat really, really good in the years afterwards. So the funding values Five Ire at a $1.5 billion evaluation, arguably making it both the world's first blockchain unicorn with sustainability at its core and the fastest growing blockchain in India. So there's lots of plans and a lot of stuff that's happening behind the scenes over here, but there is an expansion and there still is money flooding into the market. And if all you're doing is looking for the negative in a bear market, that's all you will find. But fundamentally, the core of cryptocurrency and blockchain tech continues to grow, or else there wouldn't be hundreds of millions and billions of dollars pouring into this during a bear market. You know, if big money, institutional money really thought that this was dead, it would not continue to get this kind of funding. Now, on top of this, in other big news, GameStop a long time ago announced that they were going to be creating an NFT marketplace and that they were going to be trying to really insert themselves at the forefront of tech. Now, since then, they have been working on this, and overall, their NFT sales for Ethereum-based NFTs have done really, really well. In fact, they've blown Coinbase's NFT platform out of the water. So the 2-day-old platform, it says, still in beta, has moved well over 3,000 Ethereum. And while that is a very minuscule amount in comparison to something like OpenSea, we saw that OpenSea is even seeing a little bit of their own struggles right now, having to unfortunately lay off around 20% of their employees. Now, they said that this was mainly due to the crypto winter and the macro uncertainties that is working around in really the whole world economy, but GameStop is still pushing strong here. In fact, they saw around 3,167 Ethereum in trading volume in their top 50 projects. And so what this equates to is something like $3.5 million in their top 50 projects alone. Now, this blows Coinbase out of the water because they have only done around 1,700 Ethereum since their initial launch, which is around $1.8 billion, or excuse me, not billion, million dollars. Billion would be insane. So there's a lot happening over here, and clearly, again, there's still interest in this stuff. And this could really be the push that NFTs need right now, because cryptos aren't the only thing getting hit right now, right? We've talked about this before. Stocks, indices, metals, NFTs, cryptos, you name it. Pretty much everything is getting hurt right now, especially the euro. So talking about other fiats and even the US dollar, while it's gaining strength at a record high inflation. It's odd how that works, isn't it? But nonetheless, it seems like GameStop stock and their NFT marketplace are doing really, really well right now. So very smart move on the front of GameStop. I'm interested to see if this will fall off over time or if they can continue this. It looks like they have some potential solutions coming up with Immutable X, who, you know, personally I really do enjoy. So I'm interested to see how this plays out. Now, we already touched on this, you know, with OpenSea laying off 20% 100% of their employees, so I don't want to get too deep into that. It's a very base level announcement. If you want to read the full thing for yourself, pause the video or check out one of the articles or the releases where they talk about it. But again, there's not too much to unpack here besides the action was done and their reasoning behind it. Now, in final news, Celsius has officially acknowledged a $1.2 billion hole in their balance sheet. Now, we've talked about this situation. In fact, you're probably familiar with the Celsius situation already, and if you're not, it's a very, very major news event that happened where one of the largest crypto lending and borrowing platforms unfortunately went under due to some situations from Three Arrows Capital and the Terra Luna UST scenario that unfolded just a couple of months ago. Now, this comes from them holding $4.3 billion in assets and $5.5 billion in liabilities, which creates this $1.2 billion hole. Now, I would say the unfortunate news here is that FTX was in talks about maybe helping or buying out or bailing them out or something. But it looks like they are going to be walking away from this as it talks that they are no longer interested. And this quote right here kind of tells us everything that we need to know. As the firm was looking for solutions to its financial difficulties, crypto exchange FTX reported that it reportedly walked away from talks about a potential deal to acquire Celsius, pointing to a $2 billion hole on Celsius's balance sheet. So it was reported that they have a $1.2 billion, but FTX, who said that they wanted to come in and acquire Celsius, said no. After our digging, Celsius actually has a $2 billion hole. Now, this has not been confirmed yet besides FTX saying they have the $2 billion hole, but there's clearly a lack of interest in Celsius, and I'm not sure how they're going to be able to recover on this. This article talks about how they have been making payments, $223 million to Maker, $235 million to Aave, $258 million to Compound, but it seems like people don't want to acquire them. They're still struggling. People's money is still locked up. They're still in debt for the most part. And the biggest hit is that they really have lost a lot of trust. So, behind the scenes over here, the Celsius situation still looks pretty doom and gloom for them. They definitely are not in the best of situations. But I think if anything here, what this has shown us is that there is a little bit of work to be done in these centralized lending platforms and borrowing platforms. And they are not perfected yet, which is to be expected. They are still fairly new. I mean, most of these, if at the oldest, are maybe 3-4 years old. I'd say the first crypto lending platforms that I remember started coming around 2018-19. They didn't even get popular until 2020, 2021. So their real traffic has only existed for about 2 years. So it's not like they are these ancient people. It's still very new. Still clearly kinks to be worked out. But I think the overall downfall is the debt leverage that they tried to take into UST. They tried a lot of these different places, lent out loans to people who are very reckless with their money, and now they're not going to be able to get that money back. So unfortunate situation all around for everyone. But as we are heading into the weekend, I do hope that all of you guys are having a great weekend. Again, a lot happening in the world of cryptocurrency. Maybe we will even continue to see some volatility going into the weekend. We are definitely dabbling around that 20-day moving average right now on Bitcoin. So maybe we can even eventually see a retest of that 50-day moving average right around $23,000 to $24,000 as well. But thank you all for watching. Once again, it was a pleasure having all of you here. We make videos like this one about twice to maybe even 3 times a week on a good week over here. So hopefully you can tune in and be here for the next one as well.